Hey guys, what's up? This is Andrew for TRENDLINES.com. So I'm back with a video only on AMC, guys, as I know that some of you want only to see AMC, and I understand why. This is one of the symbols of the meme movement, and it's a stock that has a great potential. So let's have a look at the technicals, at the flows, at everything, and see what can happen next. Let's get into it. Alright guys, so let me start as usual with the chart. I'm gonna try to be quick, guys, because I know that some of you have already seen my medium-term analysis. That has not changed here, so let me go quickly through it. I'm on the daily time frame. I'm using Elliott wave theory, I'm using Fibonacci, I'm using trend lines, and I'm trying to anticipate what the market might be doing. And here, what I see is that we have a first wave. We had a first wave, corrective, then so first wave in Jan 21, then correction, then here breakout, nice impulse in 5 waves that I helped you guys to swing. I mean, I did the best I could to find the levels, and I think they were pretty accurate. So I'm just trying to use the same techniques, guys, and to anticipate what will happen now. So we are in a huge triangle, guys. So triangles are usually continuation patterns, all right? So whenever you see a triangle, there is more chance we break it on the upside than on the downside. I mean, in the direction of the current trend, which here is bullish. You can see we are bullish because we are above the 200-day moving average, and we are right now in a corrective pattern. As you can see, the moving averages are just crossing each other. It's not pretty clean, but we have a clean lower band and a clean upper band. I mean, the upper band was very clean. It was like that before we had this breakout that lasts, as I showed you guys during my live 2 days ago, that lasts only 3 hours. All right, only 3 hours spent above the upper band, the triangle upper band, which is not enough to be considered as a breakout. I mean, not a trustful one. So we had this rejection, and from there, guys, I needed to update slightly my trend line. This is something you need to be able to do as well. Whenever the price action is giving you a level that is beyond the trend line you had, you need to take it into account. So this is the new trend line I'm having. It's not changing much. You can see that 44 is going to be the level we're going to need to break out above for this fifth wave to start. We are not in the fifth wave yet. I was hoping we were here. I had a counting like that before, and here I was expecting it's a 1, 2. And then 3, 4, 5. But this strong rejection here tells me that actually this was a D wave and that we are in an E wave right now. So what are the different scenarios that we can have from here? First, to know what is the medium-term trend, you can have a look at the 20 and 50-day moving averages. You can see that here we are between the two of them, so we are kind of neutral. We got rejected by the 50-day moving average at 40.4 yesterday on Friday session. We still closed the day higher, which is quite positive to me, but I am kind of neutral right now for the coming week. We can go right away, test 44, maybe break it this time, maybe get slightly rejected and break it. This is one scenario. The alternative scenario is not that bad. It's just that we're going to find, you know, E waves, they are usually zigzags. All right, so we can have something like this. All right, this could be totally acceptable. So we go maybe slightly higher, we get rejected right away, we find more support here, and then we have this breakout. So I don't believe we can break this triangle lower band, but be aware that if we do, it's not looking good. We still have more supports below. We can still move the trend line a little bit. So it's going to be fine. Here we had a little bit of a fake out, but if we break it with volume, it's not looking good. But of course, this is not one of my, you know, strong scenarios. Either we go right away to 44 or we get back some liquidity lower before breaking out. And once we break out, guys, I mean, a real breakout, not like the one we had here, just holding 3 hours. Let me show you again, guys. Here we spent only 3 hours above this trend line that has been moved right now, but it was here. So 1, 2, 3, I'm on the 1 hour time frame, only 3 or 4 candles above that level, which is not trustful enough for medium-term analysis. So now what we want to see, guys, is a full day above the 44 level. Where is the 44 level? It disappeared. Let me put it back. So here there's a little fake out above 44, but 44 was the recent high. And here you can see we almost tested it. It's 44.3, something like this. So usually when you have those intersect between two trend lines, so here the intersect is on the 22nd of November at 44. Usually the market likes to go through those levels. So let's see. But my preferred scenario is that something happens, either bullish or bearish, but that we end up coming here. And let's see what happens. I believe the breakout is coming soon. We have until, if I don't change my trend lines, which I might do a little bit just like you saw, but if I don't change it anymore, we are converging on the 22nd of December. So the move needs to happen before, up or down. I believe it's going to be on the upside. Why? So first, as you can see, I miss one wave. Okay, first reason. Second reason, this chart is bullish because we are above the 200-day moving average. Third reason, we are in a triangle that usually are in false waves. And fifth reason, guys, bam, look at that. You know the spreadsheet, but let's check together where we are in terms of synthetic short and in terms of, especially I want to check the 145 strike. Has it grown or not? We were at 17 million last time I have checked with you guys. So let's see this time. Oh, 20 million, guys. All right. So what else can I say? This is growing. This is showing how bullish people are. This is showing how it's going to be a big trouble for option market makers and for shorts if we go close to this level. So we are not there yet, I know, but this is a good information. This is my fifth reason for being bullish on AMC. What else do we have? The synthetic short is at 7.5%. The maximum is at 20%. Let's compare that with what we had in the past. I just added here. Bam. So look at the DTC, guys. Okay. August, September, October, blah, blah, blah. I do it every 2 weeks roughly. So you can see the synthetic short is roughly stable, even a bit lower than usual at 7%. But the DTC is growing. And it's the DTC that you guys want to pay attention to because it means that shorts need 3 days if they trade the daily volume to cover the positions, or the other way around, they need to trade 3 times the average daily volume to the monthly average daily volume to cover the positions. So usually between 5 and 10, it's a squeeze. We are at 3.3, so this can happen any time. And once again, the 145 strike is huge, guys, huge. 20 million, it's the biggest one I've seen. We're talking exactly about 19.8 million. All right, so it's big. And where is it coming from? You guys know where it's coming from, Jan 22. Okay, so 350. I'm also going to pay attention a lot, guys, to the option roll in Jan 22. Let's say, you know, nothing happened. It's possible, right? Unlikely, but possible. And I'm going to check if people roll the option to March 22 or Jan 23. For now, we're having 170,000 options on March and Jan 23, March 22, Jan 23, and we have 340,000 here. So I'm going to pay attention to that. It's a very, and 200,000 on December. So first from December to Jan, you know, basically paying attention to the number of total options, which is basically the synthetic short, but the maturity is very important because the shorter, the more explosive it is. And so paying attention to this is what is helping me to build my views, to find my scenarios. And here I can tell you that the biggest strike is at 40. So that's why whenever we get close to 40, we have big moves. We should have big moves because we have some gamma. So here, for example, you can see we went through 40 and big move. Okay, I'm checking only the past few days. Here, this candle was a huge candle through the 40 level. Here we went quite smoothly through it, but then we had this huge run up, then brutally below. So let's see. But if we are able to trade at 42 on Monday, I think that we go to 44, you know, for the same reason. We have a lot of gamma. All right, guys. So whenever you have gamma, the moves are amplified. What else can I tell you guys? It's pretty much it, guys. I'm going to keep following that. Of course, I'm personally going to be a buyer around 37, 38 if we go lower. And yeah, let's just finish giving you once again the targets, guys, that haven't changed. You know, my method, I like to apply Fibonacci and Elliott wave combined. I measure 1 plus 3 applied to the bottom of the fourth wave, and I go to the 1-to-1 or 1 to 1.618 ratio projection, Fib projection ratio, which is 95, 135. So I personally do believe we're going to reach those levels I don't know if it's going to be before Jan or maybe before March, but something huge is going to happen before the end of the year, because we have this triangle that is converging and the market needs to choose a direction. So that's it for me. I hope you guys enjoyed this video, and if you did, please don't forget, guys, to click on the sub, like, and bell button, so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.